Hi bankers, welcome to Yuvaguru YouTube channel. At the outset, let me first tell you, join the Yuvaguru YouTube channel as fast as possible if you are a CDCS, CAIIB or JAIIB aspirant. So because we provide the study material, the video lectures as well as the test at the lowest cost, and we have now launched in a new form. If you check the app now, it is very easy for transgressing basically. Okay. So what is the schedule for today? Schedule for today is factoring process, forfeiting and objective questions. So this is totally roughly it will be in half an hour packed session. Okay, so follow the video till end. So let's move on with the topic. What is factoring? Factoring is defined as a continuing agreement between the financial institution, that is factor, and the business concern, that is selling goods or services to track customers on open account basis, whereby the factor purchases the client's debts, book debts, either with or without recourse to the client, and in relation thereto controls the credit extended to the customers and administers the sales ledger. Now this is a huge big definition. Okay, but understand what do you mean by factoring. Basic logic behind factoring is very simple. Firstly, it's open account basis. What do you mean by open account basis? Here, if you are a CDCS aspirant or CIB aspirant, you must know these parts. Open account basis means what? Here, there are 4 types of payment methods. Okay, in any LC or any financial transaction. One is advanced, second is open account, third is collections, and last one is LC. Now, open account means what? The buyer and the seller directly speak to each other. They directly deal, that the documents are also sent directly by the buyer, by the seller to the buyer. The bank is not involved at all. The bank is just involved in open account basis only on collections part. Means collection, only on collection means payment collections part. Okay, whereas in collection, if you see the collection basis, it's like DA and DP, means delivery against acceptance, delivery against payment. There bank is involved in giving the documents to the buyer. Understand, for CDCS aspirants it's very important. Okay, so for giving the documents to the buyer, and that is used as DA or DP. DA means what? When I give the documents to the buyer or the applicant, or in the foreign country, he is not called as applicant over here because we are in collections. So giving it to the buyer on the acceptance by that buyer that I will pay on the due date, that is DA. DP means giving the payment, giving the documents to the buyer against the payment, that is against the side bills. Okay, so got this point. Open account and this collections, these two are important. Advance is very simple, means first you get the advance and then you send the goods. Okay, and last one is LC. LC is altogether a different ball game. Okay, so let's move on. So firstly, open account basis, the seller has a relationship with the buyer. A relationship with the buyer means what? Relationships here, if I am the seller, I may have 1,000 customers. So will the bank finance to all these 1,000 customers? No. Factoring is always done on a relationship basis. A relationship basis means what? If I sanction the factoring limits to any customer, okay, how will I sanction it? I won't sanction it to the customer. I will sanction the limits to that customer specifically to some XYZ relationship of that person. Means what? See here, I'll tell you an example over here. Pen. Okay, see this. Suppose if this is customer A, this is a bank X. Okay, it has sanctioned the limits to customer A. Okay, now this customer will be having many buyers. A, this B will be his buyer, C will be his buyer, or D will be his buyer. Okay, so when the X bank sanctions this factoring limits to this A, it doesn't sanction to A, it sanctions to A to B relation, or A to C, or A to D. Means what do you mean by this? If let's say this A and B are dealing for last 10 years, okay, 10 years I am dealing, these two guys are dealing, this A to C are dealing from last 1 month, new customer. Okay, let's take only 2 examples, forget this D. So 10 years, one is dealing, second is with 1 month. So if I am the bank and I am going to finance this A, whom should I finance? What relation should I finance? Should I finance from A to B or A to C? Definitely as a banker I'll be more conservative and I'll finance A to B because these guys are dealing on for last 10 years. So they are dealing in open account basis, means A directly sells to B and sends the documents to B directly through courier. No bank is involved. Then B sends the payment through some bank. So bank is involved only in collection of payments. Okay. So got this point. One is open account basis importantly, and factoring is a relationship business. The factoring limits are never sanctioned to a customer. They are always sanctioned to a relationship of that customer. Means X bank can sanction, suppose there are 10 customers. 3 of them are for last 10 or 8 years. So X bank can definitely sanction for these 3 relationships only. Okay. So let's move on now. Whereby the factor purchases the client's book debts. See this, book debts means what? If X bank sanctions limits to A, it purchases its book debts. Means what? B will pay to A, so that purchase, that payment from B to A will be purchased by X. Means B will now not pay to A, B will pay to X. But what does X do? X does a pre-shipment pre-financing. Pre-financing means what? If A sells to B on open account basis, X comes to A and says that okay, we will purchase your debts, means we will pay to us and I will give you immediately the finance. What amount of finance? This X bank generally finances 75 to 80% in factoring. So A has got 75 to 80% of finance. Now B will pay to X, and when X gets the money, it will subtract its commission and everything, and remaining amount, whatever, after all the money is of A, isn't it? So remaining amount, whatever remains, will be passed back to A. Okay, that is the basic logic of factoring. Okay, so move on. Without recourse. What do you mean by without recourse? For CAIIB clients, this customer, this is new. Student, this is new. For CDCS, you might be knowing it, right? With recourse means what? With recourse means if B does not pay to the bank, okay, means bank has priorly sanctioned limits to and financed A also. If B does not pay to X, then whether bank X has the right to go back to A and recover the funds. So if it is with recourse, then X can call on A and ask for the money. But if it is without recourse, X cannot call A and ask for money. That's known as without recourse. So the loss needs to be borne by X bank at that time. That is meant by without recourse. Okay. Let's move on. Yeah, without recourse to the client and in relation thereto controls the credit extended to the customer and administers the sales ledger. The sales ledger is administered over here. The sales ledger is checked by this X bank. Okay. Now we'll see two-factor theory. See this. How the process works actually factoring. See here, this is the exporter, this is the importer, right? And this is the export factor. So you can call this as a bank also. For simplicity, you can call this as a exporters bank. And this is the import factor, importers bank. Okay. But why don't we use the word bank over here? Because the point is, it's a factoring can be done not only by banks, it can be done by any private party also. Remember this, factoring is not limited to banks, whereas LC is limited to banks. Okay, so what happens, this exporter sends goods and invoices to the importer. Original is sent to the importer. Remember this, step number 1. Step number 2, exporter sends a copy of the invoices and the documents to the export factor. Here copy is sent over here into. Now based on these copies, this export factor immediately finances this exporter. Immediately, see this, based on these photocopies. Okay, so that is this guy is financed. Now what does the export factor do? Step number 4, he forwards this copy of documents to his colleague or known party, okay, in the importer's country, or known factor in the importer's country. If it's a bank, it's a bank-to-bank relationship. If it's a factor, then it's a separate relationship, right? So to his known factor over here. Now this import factor will check with the importer whether this transaction has actually happened in step 5. Okay, check the statements. Now what do you mean by check the statements? Check statements means these documents which are received from this export factor are tallied with the importer's purchase ledger. Okay, so by that logic, this import factor comes to know that the transaction is genuine. Now once the transaction is genuine, on the due date, this importer will definitely pay. So he pays it to the import factor, step number 6. What does the import factor do? Step number 7. Pays to the export factor after deducting his commission. Of course, this guy is working, so he'll get some commission for this, right? So after deducting his commission. So step number 7, money has reached the export factor now. What does this export factor do? He pays the balance amount to the exporter. Means what? Step number 8. He got full amount, 100 rupees. He had paid 75 rupees to this guy. So he'll deduct his interest and everything, and whatever is remaining, he'll pay back to the exporter, right? That is the logic followed in factoring, okay? The factor provides different services which can be described as under. So what are the services provided by the factor? Debt administration. Debt administration means what? Say this, exporter selling to importer, okay, and then selling those debts to this exporter. So this book debts are now purchased by this export factor. So once it is purchased by the export factor, the administration of all the debts will be done by this export factor only. So managing sales ledger of the client, saving his administrative cost of bookkeeping, invoicing, credit controlling, and debt collection. Okay, basic logic. Okay, so once I purchase somebody's book debt, so I'll have to manage it. So the administration cost comes to me, right? Not to that guy now. Credit protection. As a professional, factors will have facility to credit intelligence to enable them to assess the credit risk and advise their clients accordingly. Obviously, because here this is a factor. Factor means generally it's a subdivision of a bank, okay, or subsidiary of a bank. So definitely it will have higher resources to check the importer's credibility, okay, whereas the exporter is sitting in this country and doing his business. So he may not have that much resources to check the credibility of the importer present situation, but that can be checked by the export factor. So this service is always provided by this export factor, okay. So credit protection, as a professionals, factors will have the facility for credit intelligence to enable them to assess credit risk and advise the clients accordingly. Last is factor financing. While in here basically this part is in some countries, okay, like India. While in India financing is an essential activity for a factors, in certain countries it may not be an essential activity. So the step number 3 over here, prepayment, it may not be the step in many of the countries. So there the factor will only provide two things, debt administration and credit protection, okay. He won't provide the financing part. But in generally in India, or why only in India, in all the developed countries also, no client comes to you if you don't finance, right? Because everybody is in need of money, okay. So factor financing is an important part, this step number 3, okay. Now we'll go to forfeiting. Forfeiting is nothing different than factoring, to be frank, nothing different. Same logic, same process, only slight differences in the limits. What are the limits? Here, another product of financing of export receivables is forfeiting. It can be defined as a mechanism for financing by discounting of export receivables. Here, discounting over here, and there it was purchase, right? Without recourse, so compulsorily without recourse. There it was with or without recourse, okay? In factoring, we have with or without recourse. Here, complete without recourse, okay? To the exporter seller for medium terms on a fixed rate basis for full value. Now this is also important, full value. In forfeiting we finance 100% of the value, okay, while in factoring we finance 75 to 80%, okay. In other words, forfeiting is purchased by the financier of medium term export claims on the buyers without recourse to the exporter, correct, without recourse strictly over here. It is a source of finance and not a type of credit insurance. As such, no other cost, because it's not an insurance, it's after all the finance part, right? So logically remember, factoring and forfeiting are similar, only slight differences. Discount, this without recourse, number 1, full value, number 2, and few other points which I'll tell you over here. Forfeiting is generally for longer period, okay, and factoring is generally for commercial transactions. Commercial means 3 months transactions, like we have in collections and LCs, 90-day transaction. This is generally for longer, means turnkey projects, okay. So forfeiting is generally for long-term projects, number one. Okay. So 3 points which are to be, which separate forfeiting from factoring are: firstly longer period, second without recourse, third full value. Okay. Got this point clear? Let's move on. Type yes if you have got this clear. Yeah. Type yes fast, fast, fast. Okay. So before going ahead, join fast Yuvaguru YouTube channel, CDCS, JAIIB and CAIIB. We provide study material, video lectures, tests, everything, and check our new app. It is very dynamic and very fast. Okay. Now we come to the objective questions. What is the maximum debt period permitted under factoring? So maximum debt period. What is the answer? Type anyone if you know. Type fast. What is the maximum debt period provided under factoring? Okay. The answer is 150. Okay. This 150 days. Maximum debt period is 150 days. Next. What is the maximum grace period provided under factoring? What do you mean by grace period? Grace period is ahead of this debt period. 150 days plus next grace days. So grace days is 60. Okay. 60. Type the answer. Which of the following is not a service provided by factor in factoring? So, which services is not provided by the factor? So, management of receivables, just now we saw it. Production of goods, collection of debt, maintenance of sales ledger. Production of goods means how can a finance company give the production of goods, right? Help you in production of goods. That you have to do it yourself. So, answer is 2, correct? The type of factoring in which the factor recovers the amount advanced from the client in case of non-payment by the customer. So, where the recovery is possible from the customer. So, it is called as bill discounting, non-recourse, recourse and bill collection. Answer this, think over it. First you think and type the answer in the comment section. Type the answer in the comment section fast. Okay. Yes, let me check. So, answer is correct. Now everyone is typing. It is recourse financing. Okay, recourse factoring. Recourse means I can get back the money from the customer to whom I have financed. That is recourse. Non-recourse means I can't get back that money if I have financed to that guy. Okay. The factor generally makes the payment of dash percent of invoice value after acceptance of bill of exchange. So factoring is generally for what amount? What did I tell you? 40, 50, 60, 80. Fast. Which one? 40, 50, 60 or 80? It is correct. 80%. Okay. Factory is generally for 75 to 80%. Okay. Keep it very, very clear. How many factors are there in international trade? Just now we saw the factoring process of which we dealt in. This one. Which one? Remember? This one. Where was it? This. Yeah. This is export factor. This is import factor. So how many factors are there? Right? It's a two-factor theory. Got it? So, how many factors are there? 2. Okay? Answer is 2. Next. In forfeiting, the forfeiter makes the payment of dash percent of the export value. So, in forfeiting, what is the amount of finance? Just now I gave you the 3 differences. In forfeiting, it is always correct. Type the answer. You must think. You must type the answer because in exam you have to answer, not me. Okay. So answer is 100. Okay. Credit protection is available in. So credit protection. Why do I go for credit protection? What was credit protection in the 3 services which were given? One was what? Debt collection, that debt administration. One was credit protection. Right now just we saw it. What is credit protection? To check if the client or the buyer in that country is good or bad. Basic. Keep it very simple language because I always try to keep the language simple. Whether that customer in the foreign country who is the buyer is in a good condition, financial condition or not. That is basically done as a part of credit protection. So where will it be available? Quite logic. So it will be definitely available in what? Without recourse. Because I don't have recourse to that. And who should go for credit protection always here? If I am the X bank, I am financing to A and A is selling to B. Okay. Now I am purchasing his debts. is debts purchased by, okay, purchase, I'll write it, purchase. Now if I am purchasing, so who is taking the risk? Is A taking any risk? No. Who is taking the risk? I am taking the risk as a bank. So if I am taking the risk, I will have to secure myself, because factoring is generally non-recourse, okay, means forfeiting is generally non-recourse, and if factoring is non-recourse given by me, then I must be able to safeguard myself to check whether this B is correct or not, good or not, good financial condition or bad financial condition. So always credit protection is done in without recourse factoring, okay. Next, the process of selling trade debts to a client, of a client to a financial intermediary, is known as trade debts. Means just now see this again, the same, X is the financial intermediary, this is A the seller, B the buyer, right? So selling the trade debts means what? This guy has sold to this B, right? And he is having now the invoice and everything, he has sent it to be original. Now he is having the copies of that. These copies are sold to me. So that is sold to me in which part? Which type of financing? That is known as, just now we saw, that's the topic going on, factoring, right? So factoring. So that was a point of discussion today, and wanted to make you a few concepts clear on this. So if you are a CDCS aspirant or CAIIB aspirant or JAIIB aspirant, keep these things in mind. And before going, I would again request you join fast Yuvaguru YouTube channel for CDCS, CAIIB and JAIIB at the lowest cost, okay, because we provide all the material at the least cost possible, okay. So I'll stop over here. Tomorrow again I'll be there with a new topic. Bye.